Hello, 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 everybody. How's it going? Good morning, good evening, good night, depending where you are in the world. Morning for me, just waking up here. Can I get an audio and visual check within the YouTube audience, please? Everything good right now? We just got GJ on the screen. Actually, just switching it to the dollar screen here. You guys got your news headlines to the left. Your market sentiment screen right here with the dollar, Japanese yen, and VIX. Okay, cool. Did everybody get a chance to watch the previous market update webinar? GJ sells 0.200 retest also this session we're going to be looking for. We're looking to continue off the moves with the dollar strength as well as the outflow of liquidity on GBP, which I'll talk to you guys in a second. All right, so sorry, let me clear up the screen here. This was from analysis given last night to the private channel. That's why some people within the YouTube audience are probably already in GJ or GU sells, because we've had continuation moves from yesterday and we were also anticipating that overnight. But let's start fresh here, all right? So first things first, welcome to the Capital Hungry New York Scalping and Analysis stream. This is not direct financial advice, but after I give my analysis and trade ideas on gold, GJ, GBP USD, Euro USD, USD CAD, and US 30, then please feel free to ask any questions you may have on your mind about fundamentals, technicals, and overall financial markets. Please do not spam the chats with random nonsense. Do not ask for direct signals. Any questions about the Capital Hungry private service, you can ask any of the private members that may be in the YouTube audience, or just go to the website for more info. All of your free Capital Hungry resources are listed in multiple areas, from this little stream reminder chalkboard to the Capital Hungry YouTube layout itself and within the description, as well as I'm going to quickly just show you guys here, just so anybody can rewind. Capital Hungry News Twitter, if it loads. 22,000 headlines posted in just under a year. Capital Hungry YouTube channel that you guys are on right now. And the Capital Hungry free Telegram analysis channel, where you can see a lot of my trades over the last years, analysis, updates, and a bunch of more other information regarding the financial markets. So make sure you guys use all of your resources that are at your fingertips, as it's only going to benefit you. Okay? Now, before we jump into the analysis today and what economic events and fundamentals are at play, please understand, all of us are manual retail traders. We are not institutional traders. We do not know how the banks trade, and we do not care essentially about how the banks trade. We are focused on what we can control, what we can understand with the information and resources that we have access to. So remember, as a manual retail trader, you are always going to have emotions or other feelings that are impacting your decision-making process. The best way to avoid emotional decisions is to first have a trading plan, and then ensure that you stick to that trading plan and also follow a risk management plan, and focus more on your long-term vision and long-term goals rather than short-term satisfactions and impulsive desires. This is the best way, in my opinion, to keep emotions out, stay objective with the market, and avoid crashing your account. So everybody have a little wake up this morning. Stay smart. Okay, anyways. The recent fundamental points are still the same. We have a lot of central bank speakers this week, a lot of economic data, and we are seeing some rebalance of flow moves, which is primarily coming out of, like, we're seeing an outflow in GBP across the board. But this is due to the fact that we're coming towards the end of the quarter. This is called the end of the quarter rebalance of flow moves. This is very common, seen towards end of month and end of quarterly or end of yearly periods, where you see profit taking on a consistent trend just to set up the order flow for the following quarter to come. For example, if you are in a very bullish trend on a pair or trading instrument, towards the end of the quarter, you could see profit taking in a more aggressive pullback just to really create a dip and continue back with the trend in the following quarter, following new month. Overall, the previous FOMC gave us further signals of potential November start for tapering, and we also got a timeline that tapering will only last 4 to 6 months and be much faster than the 2008 crisis and recovery. This has obviously led to some short-term strength in the US dollar and a drop in demand in other assets against the dollar. And if you guys followed the last market update webinar, which was for free here on the YouTube page done on Monday, here. If you guys watched this webinar, you would understand that we were anticipating to play that dollar strength to take gold sells down to 1730s, to take the GBP USD sells below that daily demand zone, Euro USD sells, UCAD buys, and we adapted to GBP JPY sells below 150, 1.500 area and 151.2, as we had an outflow of liquidity in GBP pairs. But remember that we do Monday market analysis in the evening every week, so it gives you a lot of prep coming up to this scalping session, as well as understanding what's going on in the markets and why. Okay, in terms of economic data, today is Wednesday, of course, so we're not going to be looking at any of this data through our trading session, as we'll probably be done by then. But at 10 a.m. Eastern, we have US pending home sales, which is going to impact the dollar, US equities, and gold. 10:30 a.m. Eastern is the US crude oil inventories report, which is just pretty much status quo. Every single week you have this crude oils report. Then any time between 11 and 12:30, I just put it at 11:45 just to make it easy, but it's tentative between these three central bank speakers. We have Jerome Powell, Bank of England Governor Bailey, and European Central Bank President Christine Lagarde speaking today. And then tonight during Asian session, we have some China PMI data on the manufacturing side, which is in focus. Okay. Now, in terms of market sentiment, even though the Japanese yen is relatively weak, we still saw GJ bearish. Why is this? This is because as we're coming towards the end of a quarter here and only have another day left in this business month as well as business quarter, we are seeing some profit taking on GBP against other currencies across the board, leaving us having a more aggressive pullback on pairs like GJ, even though the Japanese yen is still relatively bearish. So that's why GJ, for example, had this very aggressive downside move. During the capital hungry scalping session yesterday, we took sells from 0.500 and below the lows as well. And then last night, we called the pullback sells to 151.2. I was also anticipating that even if GJ came up to 151.5, it would still only be a 50% correction of this impulsive sell-off move. And it made sense to see some more profit taking from this area. So we were calling sells from 0.500 retest or 0.200. You can see that we got the pullback overnight to create the daily candle upper wick, retest of that order block low area where we had a previous breakout to the upside. Sellers jump back in and start taking us back down, breaking these previous lows, having a clean break below the key level as well. So it does look like GBP against other currencies is still seeing an outflow of liquidity, and we can see this across the board as it's still easy to understand dollar is dominant. We called this upside strength in the dollar during our Monday market analysis, and we're looking to extend this upside strength on the dollar. As you can see, we're having those Euro USD sells finally play out for almost 50 pips now, running to the next range. This was all given for free during the Monday market update analysis. We had GBP USD sells below 1.36 flat, now up 120 pips. This was all also given for free during the Monday market analysis just a day ago, pretty much on Monday evening. And overnight, we were calling the sells in capital hungry from just a break below the support. What I was anticipating on GU as we were making this consolidation zone was two things. Either we were going to break above the consolidation zone, retest 1.36 and start dropping, or break and retest below the zone and start dropping, and also taking sells below 1.35. So what we can identify is the outflow of liquidity in GBP is still evident, and we do still have that US dollar strength, which also was given on the Monday market update analysis. This is exactly what was given to you guys for free during the Monday market update analysis, and I'll show you guys. Gold sells below 1747 and 1739. Remember, this isn't for like, oh, you have to join my mentorship. This was like on the Monday free market update analysis on YouTube. GBP USD sells from 1.36, Euro USD sells from 1.685, UCAD buys, this buy here was called at 1.263, and yeah, and the GBP sells below 151.200 was also adapted to and given on Monday. So now we can see that our analysis is playing out, and through this scalping session, we're going to be looking for continuation moves. Here on GJ on the intraday time frames, I'm going to be mapping out some more bearish market structure that's developing, as we had an impulsive play, pullback to retest and create a retest and create a lower high, then dig and break below this low, creating an intraday lower low as well. So on GJ here, to start off with trade ideas, we're going to be keeping our short-term bearish bias intact, as this structure is being respected, and we had a nice drop overnight as well. But for continuation moves, I'm looking for two things on GJ. Either we hold above 150.200, get a retest sells at 150.5 and make our way down. The red boxes being the sell areas for continuations. Or on the 1 minute time frame through our New York session, we hold below 150.200 and just continue the bearish momentum and take the scalp sells in that fashion. All right, scaling in accordingly. I would only be looking for GJ buys in two areas, and I'll show you guys why. Area number one is above 150.800. Actually, it's above 151. I would only take buys above 151 because I would have to break out of this bearish market structure that's developing, and I would have to correct this downside move that we've seen overnight. Once we break above this price sensitivity area, that would show me a lot more buyers momentum and buyer order flow entering the market to potentially taking us further to the upside. But we do not have that bias obviously close yet. The other area I would be looking at potential buys on GJ is if we come all the way down to 149.2 previous low. So this is what I'm looking at. Red boxes are sell areas, 150.5 retest, break below 150.200, break below 150, sells in these areas. And if we make our way down, we break below here, sells below 150 as well. I'm only looking for buys if we come above 151, or if we come all the way down to these previous lows at 149.2 on the daily time frame. This is a very strong daily demand zone, and fail to break down here. Okay, so to summarize, GJ peaked a daily zone and high area that we have failed to break above for an extended period of months here, and you can see that we have this very strong daily demand zone. That's number one that we want to identify. Number two is that we had this bearish market structure intact as well. Number three is that this overall order block we've been in since July, where we have failed to break these lows as well as these significant high points as well. And you can see that same thing again happened 2 days ago. And the reason for that is more of seeing an outflow of liquidity, profit taking by long-term GBP buyers from these macro high points as we're coming towards the end of the quarter. So I do see the potential, if this momentum continues, for us to make our way back down to these demand lows, then potentially maybe see another bounce there again into the new monthly and new quarter setup. All right. Obviously, GBP, when you zoom out and look at the overall bullish market structure on the higher time frames here, it's still bullish, but you don't want to start buying without the proper confirm. So overall, on the higher time frame perspective, as long as we're above 149 area, we can still say GJ on the higher time frame is bullish. You're just having a large demand zone that's being respected, and GJ has been ranging for a period of months. But we haven't broken this demand zone for me to say, okay, we're going to start making our way down to these previous highs with any market fear or uncertainty. But I do see the potential for us to fulfill this range back down to these lows as long as that outflow continues on GBP, and especially if Japanese yen just picks up some short-term strength from its lows or when it opens up today as well. All right, so now when we come to the intraday time frames here, you can see we had this rejection at the exact same price point. We were looking at the daily. This bullish push got instantly engulfed and canceled out with stronger sellers price action. And then when you're looking at more of the intraday structure on the hourly time frame here, you can see that in terms of the bullish price action, you had almost 2 days of bullish price action get taken out in a singular day. Very strong very strong bearish candles and consecutive bearish candles. And then this little bounce was looking like just a pullback to collect more sell orders and continue back down. So that's all I'm looking for on the lower time frame market structure right now, is either we continue to sell and just hold below 150.200, sell below 150, pull back to 150.5 sells. I would only take buys if we were to break out of this bearish market structure or come all the way back down to 149 flat again. Does that make sense for everybody in terms of the GBPJPY analysis we're going to be looking at and to execute through our New York scalping session with the New York volume? Any questions about GJ? If you guys were in the private chat, then you're probably most likely, any private chat members in the YouTube audience right now, most likely you guys have already taken sells from 0.200, the break below 0.8, and even the break below 150.5. For any private channel members who are in the YouTube audience right now, if you have already executed on those trades in scalps overnight, then make sure you do not over trade and over leverage and get greedy. All right, Paul, Afian, Josh, Jesse, Alexander, right? Daniel. If you guys already took these trades overnight, do not over trade and over leverage and get greedy. Make sure you guys are just sitting on the sidelines and waiting for further confirms, or just extending your runners. For anybody who is new to the stream this morning, that's what we are going to be looking for, is either pullbacks to 0.500 sells, breaks below 150.200 sells, breaks below 150 flat sells. Okay? And we're going to be watching price action as we come to these potential areas of interest to take those continuation sells. I would only safely say we can take buys coming back above this order block and breaking above the bearish market structure. All right. Headlines so far overnight have been pretty quiet, just your standard stuff. Why do you always two sides? Because at the end of the day, our job as manual retail traders is not to be fortune tellers. Okay? We've already went through this. Okay, let me answer the universe's question first. Why do you always choose two sides? There should be only one. First of all, the first bias I share is my main bias. But then you have to understand, we aren't fortune tellers. Nobody knows exactly what the market is going to do. You can have good experience technically, you can have good experience fundamentally, but it's best to be objective and be able to adapt to both sides of the coin and do analysis ahead of time for that reason. Because if your bias is incorrect and you emotionally stick to that bias, you're still going to be trying to potentially look for your bias, even though the market is going against you due to your personal subjective emotional attachment, right? So you have to understand, as a manual retail trader, you're not going to be able to always guess and fortune tell what's happening in the market. If you do have the consistency to do that, you should already be a millionaire, billionaire by now. But we use market structure, fundamentals, and technicals to align main bias trade ideas, but only talk about the other side of the coin and what we would need and what confirms we would need to switch our bias. Right? None of you guys, not me, are institutional traders. We do not know the order flow behind the scenes. We can only take and use the information that we have access to and the resources we have access to, whether that be news, economic data, market sentiment, technicals, price action, market structure, and so forth. All right? John, I don't know if you know this, but the yen index is bearish and GBP, so why is GJ bearish? John, there's a common theme, or there's a common concept within the markets known as rebalance of flow moves. This is primarily seen during end of month, end of quarter, and end of yearly time frames, where when you're coming towards the end of the quarter or end of the year, if you're in a pair that's trending extremely bullish, usually at its highs or all-time highs, you can get a potential aggressive pullback that is profit taking by the main trend buyers, that is just profit taking before the end of the quarter in this situation to set up the order flow for the next month. So you can see that GBP across the board had these profit taking moves. This was also even seen in the short term when you're looking at Dow Jones back up to these highs as well, right? In my opinion, the downside move on Dow Jones stock market indexes from the highs, even though it's brief, or on GJ from these highs, is more of a profit-taking move by the main trend long-term buyers, as they understand we're coming towards the end of Q3 and starting up Q4. So you can see this potential order flow set up a higher probability of the time during the end of the month, but more so with the end of the quarter, end of the year periods. Because in the real business world, whether it's in banking, sales, corporate America, or wherever it is, you have to understand that the monthly periods, quarterly periods, and fiscal year period has significance for bank processing. Okay? No problem, John. I'm glad I can answer that question for you. Okay, everybody, by the way, I'm looking for further, just because we got the USD CAD's price alert, I'm looking for buys on UCAD above 1.27. So on UCAD, just because we got the alert and it can potentially start setting up soon going into New York Open, I'm looking for the buy scalps at 1.27 where we're coming to. All right? Like pretty much soon or into New York Open, I'm looking for buys above 1.27. as well as buys from this medium term zone if we get a retest here again. All right, so just keep an eye on this. I just want to talk about that first just because we got the alert. Let me sorry, yo, my freaking so I am looking for buys to keep it clean. We can see on USD CAD, obviously the dollar's holding strength. We had a nice buy bounce from our demand zone 1.264, right? And now we're creating a consolidation zone here. Yeah, we called this buy in our Monday market analysis. Now we're looking for continuation moves above 1.27. Playing that dollar strength and dollar domination. So all I'm anticipating is we had this consolidation zone and waiting for that breakout. And you're going to see a nice 20-30 pip scalp there going into the New York session hours. So we're going to watch price action. if we break above 1.27. So patiently wait for that. No clean breaks above yet, but that's probably going to come during the New York Open in about 19 minutes. Okay, on GBP USD, I'm looking for pullbacks to 1.35, and I'll show you guys why. We're already breaking below that daily demand zone very well. This is a New York scalping session. I don't know if your brain is retarded, the universe. You seem like you're a great trader, so I don't know why you're watching the stream, but through a scalping session or through a live streaming session, you're not going to be able to always get 100 pip trades, 50 pip trades through a 2-hour freaking YouTube stream. So that's why we do these sessions going into actual session volume periods, so people can take advantage of the session volume and analysis and get those scalps if they wish. This, as it says, is a New York scalping stream. For anybody who wants to take intraday trade ideas, you should have been already following the Monday market analysis, where we call the UCAD buys from the low, the GU sells from 1.36, gold sells from 1747 and 1739, Euro USD sells below 1.685, and so forth. That was the analysis trade idea stream given a day ago, right? But yeah, you seem like you're a great trader, hiding behind the screen in your mom's fucking basement, wearing your Fruit of Loom dirty ass brown underwear, trying to come tell me how to do my job here. So I'll just let the chat roast you. Everybody, Mr. the Universe over here thinks he knows his shit. Why don't you ask him to prove some trades? Let's see some trades. Let's see your UCAD buys you're talking about. Most likely you're gonna have nothing to show. We don't want to see just we don't want to just see a random chart. We want to see the entry. Okay, so here we are, guys. Who did watch the sorry guys, who did watch this webinar in the chat? Put a 1 in the chat if you guys watched this webinar, just so I can continue off here on the daily chart on GU analysis. Did you guys get a chance to watch this on Monday evening? Okay, so a good amount of people saw it, right? All right, okay, good. All right, so just so I can continue off here. So what we were anticipating on that Monday, what we were anticipating in that Monday market update webinar was that if we finally break below 1.36 on GBP USD, this demand area that has struggled to break below, but it showed us a lot more probability because we have the dollar strength. What is pop quiz to keep everybody active, to keep everybody's brain activity high? What is the US dollar? And why, regardless of what pair it's in, why does the US dollar hold so much strength? You guys know I talk about this a lot. Pop quiz, everybody. Obviously, it's a currency, but what type of currency is it compared to the global basket of currencies? Thank you, thank you. It's a safe haven, yes, but it's also a world reserve currency, correct. The US dollar is the global business in reserve currency, right? So regardless of what pair it's in, dollar always dominates. Regardless if the dollar is going up or down, you're going to see the correlated movement on other pairs against the dollar. So we understood that the US dollar standalone was showing us a lot more strength, right? Why has the US, pop quiz number 2, why has the US dollar over the last period of a couple of weeks been so bullish? What has made this dollar so bullish? 2 things. Oh, you guys are learning. Okay. You know what? I'm a little bit proud of the YouTube audience, the hyenas. Hyenas, give yourself a round of applause. Hyenas, I want every hyena right now who said tapering talks. Also, the stronger U.S. economic data we've had, right? Give yourself a pat on the back right now. You guys passed both pop quiz right now. Your brain activity is high. We're all learning together. Good job, good job. So, we can see as the US dollar finally broke this previous intraday high and is making its way up to 94 flat, that everything against the dollar is starting to continue back down. So as the dollar continued bullish and we had more tapering talks, gold had this very strong downside move, printing a new intraday low. GBP USD finally cracked 1.36. Euro USD finally broke 1.685, which was that obviously demand zone. Don't worry about UCAD. We still have 13 more minutes. All right, we still have 13 minutes till New York Open. We'll get those UCAD buys during New York Open. Don't worry about that. And that's what we're looking to potentially continue on here. So we're well below this zone, and I see GU coming down to 1.34 flat as a target point as long as we maintain below these 1.35 areas now. So in terms of some intraday, the only thing we have to keep an eye out for today, which is going to impact some of you guys who are trading later, is Jerome Powell speaking. Okay. All right. So we do have Jerome Powell speaking. We know he's a fucking dickhead, and he always likes to cause a mess in the markets as we're trading. All right. But this is what I'm looking for on GBP USD at New York Open. I'm looking at two things. Either we get two sell areas. As long as US dollar continues bullish through the New York session and we don't have any reactive headlines to focus on to bring us any uncertainty or doubt or dollar weakness, I'm looking for, depending on price action, either a retest of 1.35 flat and some scalp sells down, or the retest of our sell zone we used last night, which is below this support and order block that was being created, below this consolidation zone. Okay. the clapping I did, shit, my bad. I didn't mean it to sound suspect. Someone said that sounded like some cheeks clapping. Yeah, I guess you can say it did. Okay. So this is what we're going to be looking for on the lower time frame in about 10 more minutes, is a retest. And based on the price action, which I'll show you guys exhaustion confirms, we're looking for sells in these areas, sell scalps in these areas. Yes, don't worry, I'm going to go to Euro USD right after this. We're going to go through all these pairs: gold, GJ, GU, Euro USD, USD CAD, US 30. Don't worry, John. I know in the media news, John just asked a good question about the debt ceiling and if the US enters a default and if the government shuts down. That's a good question. But you have to understand, Mr. John, that the debt ceiling has probably been raised dozens and dozens of times over the last decade. Every time you have this whole issue regarding increasing the debt ceiling, you have to understand that it's more just political noise between the various political parties, like the Republicans blaming the Democrats blaming the Republicans, but they never actually do not increase the debt ceiling. Right? No, universe, we're not looking to take buys. We're looking for pullbacks and continuation sell. It's okay, guys. I'll let the chat roast that guy. He's eventually gonna stop from the chat just roasting the shit out of him. That's the way. All right. Some people's brains are not the smartest. You know, it's okay. And for anybody here who is on the autistic spectrum, let's support them. Everybody, no more roasting of the universe. The universe is on the spectrum of autism. Let's just help him. Let's help him learn. His brain works at a bit of a slower pace than all of ours. He has some learning disabilities, but that's not us. That's not for us to make fun of. That's not for us to judge. We're here to help. He's on the spectrum. It's okay. It's okay if you're handicapped. We're going to help you here. We're going to help you learn about the markets. Right? Euro USD next. Euro USD is the same idea as GBP USD. We are finally starting to target and digging into these low points as a target area. When you're looking to the left, at around 1.16 flat is the target I want to see us fulfill and continue drop on Euro USD. All right, you can see that we're having some strong bearish market structure being created as well. We're breaking below these previous price sensitivity area lows. We have stronger bearish price action. Okay. And we have US dollar strength dominating, as well as we're coming towards the end of the quarter. We are going to have to be cautious as we come down to these price points to make sure that we don't have any aggressive bounces. But I do see this daily candle potentially coming down to that 1.6 flat price point area, which is like another 40-50 pips down. All right. On the intraday time frames, we've had some very nice bearish market structure created as well. I'll answer the rest of questions once we go through our gold analysis, Euro USD. UCAD, we already are going to start looking for buys at New York open hours once we get a clean break above 1.27. What the fuck's going on with my TradingView charts, man? We're just waiting for a break out of this range, and that's probably going to come with the New York volume if we break above 2.7. Otherwise, we're going to wait for retest buys at 264. GU, we're going to be looking for sells in these red box areas or a break below the current low sells with momentum. GJ, we're going to be looking for retest sells at 155. Or the breaks below 150.200 sells and the breaks below 150. Okay. GBP USD already gave. Euro USD, we're going to be looking for pullbacks to 1.67 or the breaks below these current low sells at 1.64 and sells below 1.63. Yeah, gold. Don't worry what to do gold now as well. UCAD. You dumbass. I already secured 1,200 pips in the last 15 days. No, you didn't. No, you didn't. No, you didn't. Stop the cap. Stop the cap, bro. UCAD, we're looking for buys at 1.27. Or if we get a deeper pullback to 1.264. We're still looking for buys in these areas on UCAD as long as dollar continues bullish. We can see US dollar is very bullish here, looking nicely. What did I forget? We did UCAD, Euro USD, GU, GJ, gold. Okay, gold. Here on gold, when you're looking at the intraday time frames, you can see we've had a shift out of this bullish structure here. A rejection at this higher time frame supply zone and a creation of bearish market structure as we're having sellers continuously printing lows. Then we have these minor pullback or consolidation phases to get sellers in from better price points and potentially continue our way back to the downside. Right now, what we have the potential that gold, as we're entering the end of the month and end of the quarter period, and also as we're coming towards this higher time frame demand zone at the 1730s, that gold can enter a bit of a short-term pullback phase, and this pullback can extend hundreds of pips. Whether you're looking at gold in bullish market structure or bearish market structure, you have to understand that the way gold behaves, it does do very aggressive pullback phases. Like here, you have a bullish upside move. You have over 100 pip pullback here, for example. Bullish upside move, maintaining structure. 200 pip pullback here, back down to those lows. And then you continue to the upside and so forth. It's the same whether it's bullish or bearish market structure. Here we just have the inverse. So fundamentally, gold is bearish as the US dollar is strong, as well as due to the Federal Reserve tapering talks. When the Federal Reserve discusses tapering as well as stopping the stimulus support for the economy, this combats inflation, which is a bearish impacting factor on gold. This also gives signals that interest rate hikes in the future, which is a bearish impacting factor on gold. And you also have the US dollar turn bullish, where here in the currency pair, not the currency pair, in the precious metal we're trading it against the currency dollar. We're not trading XAU euro, we're not trading XAU AUD, we're trading XAU USD. So as the dollar's held strength, as we've had more tapering talks in the potential timeline of tapering, gold has been more bearish overall. We've only had impulsive sellers plays. And look at the difference in price action when you're looking at the shift between a bullish structure and a bearish structure. When you're looking at the bullish structure, right, you can see that the stronger impulsive plays are always moving with trend, meaning you have very strong bullish upside plays, minor bearish pullbacks or consolidation zones, right? Until you get a shift in structure with a fundamental shift in the bias that came from tapering. Here you have the inverse. Very strong sellers plays when you zoom out and look at that are continuously printing lows, and minor consolidation phases on the bullish side or pullback phases that don't break overall market structure, right? So what we can anticipate as we're coming down to this higher time frame demand zone is that at 1730 we have created a new intraday low, right? And as gold prints these lows, if we don't break back below 1739, gold does have the potential to start entering this pullback phase and looking for better risk versus reward sells from the 1759 price points and so forth. Okay? So what I'm looking at for trade ideas on gold are two things. If we do not break below 1739 today, this is going to be a key make or break decision point where we still have the potential for gold buys to stay active in a corrective pullback phase and take us up to the 1750s, potentially 1759s, and then continuing back down in the new month and new quarter. Because remember, we only have one more business day left in this quarter and in this monthly candle. This monthly candle is pretty bearish when you're zooming out, and it wouldn't be out of the ordinary for it to close with a bit more of a pullback at like 1750, 1759. It's not out of the ordinary. It would still be closing below this zone. It would still be closing nice and bearish. It would still be giving us the potential historical repetition that we were talking about during our Monday market analysis webinar, right? So I'm still in that bearish bias on gold, but we have to understand that in the behavior of gold, we have seen that as it prints these impulsive lows, this is on the hourly time frame now. Look at it, for example. This is the low move, right? Well, from this low of 1780, you have a pullback that extends almost 200 pips, 300 pips there before you get sellers jumping in from better price points again, right? Then you have sellers jumping in from better price points and more sell orders fulfilled here gold impulsive lows continue again. A new low printed, a very clear defined low, and then as that low you get some sellers exhaustion and profit taking by sellers, you enter a pretty aggressive pullback phase again. This pullback phase goes to retest the low of the previous zone here, collect more seller order flow, not break overall bearish market structure that starts to form, and then you get sellers jumping in, extending us down into new lows again. So now when we're looking at gold at this 1730 base, similar to the low printed here, the low printed here, and now the new low printed here, we have to be very cautious. We can't just expect another drop without the confirm of more sellers order flow in the market. We do have the potential that as we're coming towards the end of the month and end of the quarter, if gold was to do a pullback to 1755 and collect more seller order flow, is that out of the ordinary? Is that not normal behavior for how gold moves between buyers and sellers transactions? I'm not saying that we're gonna go from current price point to 1755 today. But when you look at the way gold behaves after creating these lows and having these pullback phases, it would not be out of the ordinary to have that pullback for the new month, collect those seller order flow from better sell points, and continue right back down bearish. Does that make sense for everybody? In terms of the intraday structure and macro market structure being developed, that's being induced by the fundamentals of Federal Reserve tapering to come. Does that make sense for everybody? Okay, so as we understand that gold can enter a potential pullback phase, we have to watch that market structure accordingly based on the intraday price action. So what we can see right now is on the lower time frame, you can see that this bullish corrective structure is starting to form. Very similar to like when you had lows printed here. You had this bullish corrective structure from those lows respected all the way up to the 1780s. Then you had rejections here and a shift in structure, and sellers jump right back into the lows. So we can't safely sell gold right now unless we were to break this bullish corrective structure and come below 1739 or 1730. If we can identify that this is the pullback phase for gold and we break below 1739, we'll sell, and we'll also safely sell below 1730. Okay? Otherwise, if this little corrective structure gets respected for the time being and we come down to 1739, fail to break, we are going to have some corrective pullback buys here on gold coming above the retest of market structure here. And 1747, going to retest better sell areas and collect further seller order flow. Right? So personally now, even though we called great sells our market update webinar from 1747 and 1739, we have had new lows printed by sellers. We're seeing some exhaustion by sellers and profit taking, and we're seeing gold entering pullback structure from its lows. This does not mean gold is on the higher time frame turning bullish now. This just means we're entering that pullback structure. All right, so this is what I see here on, like, for example, the pullback structure you had here. Here you just had more of a consolidation zone. Here you had an actual pullback, then drop. Here you had a consolidation zone and drop. Now here we're entering a bit more of a pullback structure as well for the time being. So you don't want to start jumping into sells as the pullback structure is being respected until you get confirms of exhaustion at a better sell point and a shift out of that pullback structure. Meaning we could come up to 1751s, then break and retest below 47 and then continue our way back down. But you would need a break out of this current pullback structure in respect from these lows to continue the further sells. And we might not get that until the new monthly candle and new quarterly candle setup. All right. So here, this is what I see on gold in terms of trade ideas. If we come down to 1739, don't break. Potential scalp buys. Scalp buys above 1747 as well. Just in the short term, playing the pullback structure. Right? I'm only looking for sells if we come below 1739, come below 1730, or come at better sell areas at 1759 and 1764. Right now, we can see the seller's price action has been slowing down. We can see that overall volatility and volume overnight has been slowing down compared to the last couple of days, and that we're maintaining this pullback structure for the time being from these lows. Okay. Does that make sense for everybody on the gold analysis? We're at a very tricky spot on gold from these low points in pullback structure, as we're also coming towards the end of the month and end of the quarter period. So it makes more sense of having a bit of a pullback. And think about it. When you're looking and zooming out, and you're looking at this 3-month candle, which is the quarterly time frame, right? Or you're looking at the we already looked at the 4-hour time frame. And you're looking at the monthly candle. Would it be out of the ordinary for this monthly candle to close as is, the new monthly candle to make an upper wick, grab some liquidity from that 1760s price point, and then continue right back bearish to fulfill the order flow? You know what I mean? You have to keep in mind as a trader to understand the timing of the markets. Hey, we're coming towards a monthly close. It's not just about hey, we have a new monthly candle opening. The end of the month or the start of the month and the end of the quarter and start of the quarter is very important to overall corporate world and banks in terms of order flow processing and bank processing. Okay? So if this monthly candle is closing in the next day pretty much. If it closes bearish, it's not going to be out of the ordinary for the new monthly candle to create an upper wick, collect more seller order flow, and continue back down with the tapering talks. And especially when we look at the 4-hour time frame, and I was showing you guys how gold has been trending overall in this structure, you can see, and I'll show you guys other situations as well. For example, look at gold's bearish market structure here. Right? Look at gold's bearish market structure here for an extended period of time. You can see you have some very strong impulsive sell plays, but also correlated pullbacks that can extend hundreds of pips, right? As lows are printed. New low printed here. Very strong pullback that doesn't break previous highs and doesn't break structure. New lows printed here. Very aggressive pullback phase that doesn't break structure. New low printed here. Very aggressive pullback phase that doesn't break structure, but these pullbacks can run hundreds of pips. So during these pullback phases, if you're just saying, okay, let's keep selling gold, the market is going to take you out and rip your retailer account when gold is doing a 200 pip pullback. The overall bearish market structure stays intact, but this is the way gold behaves. You can see we don't get a shift out of structure until we come down to the previous lows, fail to break, and then finally break and retest out of the bearish market structure and has some weakness. No, I do not think buyers are in control on gold due to the fundamental reasoning of the Federal Reserve getting closer and closer to tapering confirms. Okay? Now, let's look at gold on the bullish side when it's trending bullish, right? It's just the way gold behaves. Gold is not a currency pair. Gold is a precious metal safe haven traded around the world, right? Gold has upside moves, prints highs. You do have some 100 pip pullback phases. Here you had an upside move, print highs. You enter a consolidation zone instead of a pullback phase and you break out above the highs. Here you have an excessive upside move to print new highs. You have a 100 pip pullback phase. Same thing here. Same thing here, pullback phase. You finally get a shift out of this structure when you come back to these highs, fail to break, and shift the market structure. But if you're playing the gold buys for this extended period of time and you're trying to buy during these pullback or consolidation phases, most likely those 100, 200, 300 pip pullbacks are going to destroy your account. You have to patiently understand the market waves. Where are we in the market structure? Are we going up into new highs, or are we sitting at a high? Are we entering a pullback stage or a consolidation phase? Right? So now you can see something similar with current structure here on gold. Overall, we're having bearish market structure being respected. You're having sellers continuously print impulsive lows and then entering these very aggressive pullback phases that extend hundreds, if not 200 plus pips. If gold from this current low printed for the new monthly candle wants to come up to 1760, I would think nothing of it. And that's a good point as well, FX Store. When the dollar is softer or ranging, gold has a more aggressive pullback. That's the reverse of the dollar movement as well. Right? So if gold for the new monthly candle, new quarterly candle wants to come up and retest better sell points and collect more sell order flow, then make our way back down to these lows and potentially deeper, I'm not going to think anything of it. I'm going to be looking for the sells from these price points of interest and continuing the overall structure. Just because of a pullback does not mean gold is now bullish bias. This is just the way the precious metal behaves. Does that make sense for everybody? So right now, when we're looking at gold's market structure, what has gold done over the last day? Did gold go to revisit a previous low, or did it print a new intraday low? What is this price point? Gold has printed a new low below previous lows, right? So gold does have the potential that if it doesn't revisit these lows, that we can slowly start to enter a pullback phase. And this makes more sense about a potential pullback because we're coming towards the end of the month and end of the quarter as well. So that's why I said we have to be very cautious here. I'm only going to sell gold if we cleanly break below 1739 or break the previous low, show a lot more seller's pressure. Otherwise, I'm going to play this pullback structure and wait for better sells at 1764s and 1759s based on that higher time frame structure I am showing all of you. Okay? I either see two things happening. Continuing to respect this little pullback structure and over the next week making our way back and having gold enter this aggressive pullback phase and then continuing to drop, or we patiently break this corrective structure, break below 1739 and sell in this fashion. Okay? Right now for New York Open as well, what's interesting is this hourly candle doesn't have much of an upper wick. So we're still respecting this lower time frame corrective structure, this lower time frame pullback structure. This does not mean gold is bullish higher time frame. This means that from the new low printed, this is the transaction between buyers and sellers. So I explained to you guys the market structure technically, right? And I explained to you guys the pullback phases. But this is how I read the order flow. So let's just say here you have strong bullish market structure developing for an extended period of time. Remember, the whole point of the markets or day trading, whether it's on a slower time frame perspective, whether it's on a higher time frame perspective, is to potentially invest a risk into a position, make some money on that risk, and then of course take your profit out of the market. Whenever I see an upside play and then a pullback created, this is the transaction that I'm seeing between buyers and sellers, and I'm gonna explain why. Okay, this is what I see. I see buyers entering from low points, extending up to a high, then the buyers take profit and exit out of the market. This taking profit of the buyers, you can only have the buyers exit out of the market if sellers also jump in hand to relieve them out of the market. Money is only moving from hand to hand in the market and constantly circulating between the winners and the losers, majority being the losers. But this is all the market maker moves we're seeing. As the buyers enter from strong demanded price points, right? They extend their gains, and remember, through every single minute candle, every single hourly candle, you have billions and billions of dollars of liquidity moving every single second. As buyers take profit, sellers jump in to relieve them out of the market. This is what creates a pullback stage, right? Let me wipe it dry here. Sellers relieve buyers. This is how I dissect the transactions between the buyers and sellers. Then, as the buyers take their profit, sellers relieve the buyers. You get more buyer order flow fulfilled at a better demanded price point. Buyers jump back in post pullback at better demanded price point. Then you do the same thing. Buyers jump in from that better demanded price point. They extend you up into a new high. Then at that new high, you can potentially anticipate the same transaction. This is going to be valid as long as the bullish market structure stays valid. You only have buyers entering the market, taking profit, pullback phases, demand zones being respected, and buyers jumping back in to extend into new highs. This is, in my opinion, the transaction between order flow behind the scenes that creates the market waves. This pullback is just buyers taking profit, sellers relieving the buyers out of the market, pushing the price down to a demanded price point where more buyer order flow gets fulfilled, and you continue back up with the trend. Do you understand? Yes, big money buying and selling, mitigating their orders, correct. Whether you want to call it big money, market makers, whales, 1%, whatever you want to call it, but that's exactly what it is. Do you understand? If you start to understand the market and dissect the market structure between these buyers and sellers transactions, you can see the difference. You can also see with the trend, the bullish moves are much stronger and much more impulsive, and the bearish corrective moves are slower, or consolidation phases, much slower pullback phases and consolidation phases, right? Now let's look at this bearish market structure overall where sellers are in control, right? So sellers are in control in this market based on the market structure. As you're having sellers enter from these price points of interest, here, we're going to mark it out in red lines this time. Sellers enter the market, sellers stronger than the buyers, right? Here you have sellers enter the market. Fundamentally based on taper talks and Feds. Seller order flow enter the market. Seller order flow enter the market. The sellers extend into new lows being printed. And then you see sellers from these new lows being printed take some profit off the market. Seller take profit. Seller take profit. Potentially here as well, if we maintain these lows, sellers take profit. For the sellers to actually take profit and get out of the market, you have to have somebody relieve your order flow on the other side of the coin. So you have buyers enter accordingly here during these pullback phases to relieve the sellers out of the market, And here, push price down to better sell points. So here, we're going to watch 1739 accordingly. Don't worry about it. We don't have anything to execute it on yet. Buyers relieve sellers out, create technical pullback. Buyers relieve sellers out. Buyers potentially relieve sellers out. If we right? Then as the buyers relieve the sellers out, as long as you don't break the market structure and the fundamentals are on track, sell orders fulfilled at better supply zones. Sell orders fulfilled. Sell orders fulfilled. Right? This is what creates these market waves. And you can see, compared to the inverse of the buyer structure, remember we were just looking at the buyer structure to the left? Compared to the inverse of that, look at the price action. The bearish moves are very strong and impulsive. Very strong, impulsive sellers move that goes to print new lows and maintain the structure. The buyers' pullbacks are much more slower and corrective in terms of the price action, or you enter these consolidation phases. Right? So when you line up the fundamentals, the technicals, and understand the order flow behind the scenes, it becomes much easier to read the markets. All right? Does that make sense for everybody? And also, this concept that I'm showing you guys can be applied to any currency pair, any commodity, any trading instrument. When you're identifying market structure technically, as well as looking at the buyer versus seller transaction and order flow alongside the fundamentals as well. So that's why I only see gold sells if we can break out of this corrective structure and come below 1739. Then I'll see some gold scalps. Otherwise, we're respecting this little corrective structure for the time being. Right? All right, let's go check out the other pairs we're waiting for analysis on. Looks like UCAD made a nice little lower wick on this New York Open candle. Once we break above 1.27, we're going to have some nice UCAD buys. What happened? Is there a sound for this alert? No, there isn't. Okay. So once UCAD breaks above 1.27, we're going to start taking buy scalps on UCAD. And that's looking like it's potentially setting up shortly. The hell, I got PPLs here. Right? Get ready for the breakouts on potentially UCAD once we break above these 1 minute highs. Euro USD, we're patiently waiting for the pullback to 1.67 or a break of these low sells. GU, we're waiting for the pullback to 1.35. GJ, we didn't break below 0.200 yet. We're going to patiently wait for the sells at the retest of 0.500 or the breaks below 0.200 sells. And gold, we're still watching accordingly, waiting for those price points of interest at 1739 area. Okay? For the time being, in terms of market sentiment, we can see that dollar still is holding short-term strength here, which is good. Right? So dollar still holding some short-term strength as well. And we have a lot of potential for dollar to go up into 94 and potentially a bit higher. All right. Yen still weak, but GBP is still weak overall across the board. Dollar domination, the reason why dollar correlation and dollar domination has been so strong, whether dollar's bearish or bullish, and that correlation it has in the currency pairs it's in is because of the asset purchase program over the last year and a half by the Feds. Oh yeah, we forgot to give US 30 analysis. Sorry, we didn't do US 30 yet. Okay, US 30. Obviously, US 30. One second, let me drink a fucking sip of water here. Got a fur ball. Freaking mouth was dry as hell. All right, US 30. Pop quiz. Why is the US stock, even though there's still market fear around the pandemic, even though there's still market fear regarding the potential COVID variants and so forth, why is the US 30 stock market index or other stock markets well above pre-pandemic prices? Why is the stock market so bullish? What is the fundamental reason the stock market has been so bullish? The money supply increase that is going to inject the financial markets through the I was about to say capital hungry asset purchase program. Maybe one day capital hungry asset purchase program, but through the Federal Reserve asset purchase program and stimulus for the US economy. Okay? Wow, you guys are learning. Everybody, hyenas, another round of applause, and I want all you guys, including me and our Fruit of Loom underwear, pat yourself on the back. No, I'm being serious. You guys got it right. Everybody here is starting to learn more and more and connect the dots, right? So the stock market has been extremely, extremely bullish. You've only seen, sorry about the claps. You've only seen upside plays, pullback phases, and continuations to the upside. Yeah, UCAD, don't worry yet. I'm going to call out an entry if I see it across the pairs. I don't see any good scalp entries yet. All right, don't worry. If I see entries on GJ, Gold, GU, Euro USD, or UCAD for scalps, I'll call it out to you guys. Don't worry. All right. So, and remember what I was telling you guys when we were looking at the market structure on gold? Look at the market structure here in the higher time frame on US 30. So what are you seeing here? What do you guys think you're seeing between the buyers and sellers transactions? What have you been seeing in terms of the market makers mitigating and managing their order flow? What have you guys been seeing in terms of the buyers and sellers transactions? You've only seen buyers enter from low points or demanded price points, extend up into new highs. Then you have sellers relieve them out of the market, create these pullback phases that take you to a better demanded price point and continue right back bullish to the highs continuations back up. Yes, now you guys are learning, right? So have we broken that bullish market structure yet? No. Have we broken previous significant low points on US 30 being around 33,000 flat? Is the last real previous higher low that extended us up into these highs. We've only seen buyers enter the market, extend us into new highs, have pullback phases. Sellers jump in to relieve the buyers out of the market as they take profit, create these pullback phases to better demanded price points, and then continue right back bullish, which we identify technically as bullish market structure. Higher highs and higher lows. I just want you guys to understand the transactions behind the scenes so you don't fight the market. All right? Yeah, don't worry. I don't see any good scalp entries yet. I still see gold potentially if it holds below 1739, but I can still see it potentially bouncing around here in this area. GJ, we're not entering in this range yet. GU, we didn't get the retest sells yet. Euro USD, we're either gonna sell at the break of these lows at 1.65, or at the retest of 1.67. UCAD, we're gonna buy with cleaner price action if the 30-minute if this 30-minute closed above and we get a break and retest here above 1.27, which I don't see yet. And we're giving US 30 analysis now. Okay, but overall we can identify that the US stock market index is still maintaining overall bullish market structure. But we are starting to see some exhaustion from these high points and the potential for further profit taking as we're coming towards the end of the quarterly period. So I do see that this potential daily candle here can turn bearish and make its way down to 34K flat, especially if US dollar continues its strength, just to see further profit taking by buyers at these all-time high points on the stock market, set us up better order flow for the new quarterly candle, then continue potentially back bullish into the new quarter and new month. All right. So even though the higher time frames are extremely bullish on the stock market, we have to understand that concept of market timing and that potential profit taking by buyers as we're coming towards the end of the month and the end of the quarter period. Okay. So that means when we're looking at US 30 here, I'm starting to see some bearish market structure form. And if US 30 breaks below 34,300, I do see some sells down to 34K. Okay. I also see sells if we come up to 34,600 and fail to break. I only see buys on US 30 if we come all the way down to those previous lows I'm showing you on that higher time frame demand zone, or if we broke above 35K flat. Otherwise, in the short term, I'm anticipating some more potential profit taking by buyers from these highs, end of quarter rebalance of flow moves, and potential downside to revisit these buy orders and continue back up. All right. Yes. Now, if this gold hourly candle closes at 1739 without an upper wick, this is showing me a lot more seller's pressure, where then if the next hourly candle, the new 4 hour, makes a bit of an upper wick, then we're going to come down and sell. All right. No, we didn't call any entries yet. But we do give analysis, Kevin Bryan, regardless. Kevin, Mr. Kevin Bryan, maybe through your whole life, your parents held your hands and gave you pats on your ass and say, hey, this is how you do everything. Maybe your teachers held your hands, gave you pats on your ass and said, hey, Kevin, this is how you do everything step by step. Maybe your boss you work for gives you directions and holds your hand and slaps you on the ass and says, hey, Kevin, good job. But at the end of the day, if you want to be successful in trading, you can't just depend on one singular person giving you fucking call outs. Have some fucking responsibility and personal accountability. All right? We gave analysis through this session. We might not get the live calls through the 2-hour session where we're watching the markets. Just because I gave analysis on pairs doesn't mean that the 2 hours fucking Jeevan sitting at the computer, we're gonna have these trade ideas play out. I'm not a market maker. I'm not a market whale. I'm not an institution. I don't click buttons and make price move the way I want it to. Do you understand? So just because you've had your hands held through the rest of your life, whether it's when you were a kid, whether it's when you were a child, then when you were in your teenage years, just because you never had any trust and confidence in yourself through the entirety of your life, does not mean you have to come here and depend and jump on my back now. All right? I'm not here to carry you on my back. I'm here to give you guys information technically and fundamentally regarding the financial markets, allow you guys to learn more, and potentially increase your confidence in market knowledge as you put the required time and effort in. Do you understand? Because if you're purely dependent on me, What if my trading keeps continuing to improve and then I don't do these free streams anymore? Then you're not going to be talking about a trade idea called out. You're going to say, fuck, where's Jeev? I don't even know what the fuck gold is doing right now because I was depending on daddy. I'm not your daddy. You might see me as your daddy physically. Mentally, you might see me as a father figure. I'm not your fucking dad. All right? No, there's no entry on gold yet, right? Remember, during our session, we're trading and only at the charts for maybe 2 hours. Then I go to the gym and go live my life. If the analysis plays out after the stream is done, what do you want me to say? Huh? What do you want me to say? Exactly. If the analysis continues 2 hours after the session went out, what do you want me to say? Hey guys, because guess what? People are still going to message me and tell me, hey Jeev, thanks for that analysis you gave this morning. At 11 o'clock, I took UCAD buys, or I took this gold trade, and I appreciate the analysis you gave me. It wasn't a live entry call because we didn't have the good live entries during the time being. All right? UCAD what? What happened on UCAD? No, I only spend 2 hours during a scalping session. I personally trade in a day trade style based off alert systems and higher time frame analysis. But in the capital hungry service, as well as within the community, I like to do scalping analysis and sessions for people. If you guys are scalpers, you should only be at the charts during a session, maybe for 2 to 3 hours max. You shouldn't be scalping at the charts for 4 or 5 hours. You know what I mean? You're probably gonna lose if you do that. Everybody thank Kevin for missing the live UCAD entry. You guys can thank Kevin for distracting your boy here and not being able to call you guys the 12 pip live entry here right off the key level like we called ahead of time. So everybody, round of applause for fucking Kevin. This is why nobody likes you in your life, Kevin. You're selfish, Kevin. I'm just kidding around. Let's see if we get a retest the new 4-hour candle for anybody who didn't get an entry. GJ, we're also gonna GJ, we didn't get the full retest of 0.500, but let's start seeing if we get the breaks below 0.200 here for the sells on GJ. GU is already just continuing to drop. That's perfectly fine. Euro USD, we're also going to be looking for sells at 1.265 area coming up below these candle body lows here. And gold, we're going to wait for gold for the new 4-hour candle. Gold, I still don't see any entries. It's not following analysis yet. GJ, once it breaks below 0.200, start selling GJ. You're going to have to watch first 10 pips down. And then you're going to want 150 as the next target point. Someone said, you don't have to be such an asshole. Positive vibes work better. Let me know how positive vibes help you profit in the financial markets. Man said positive vibes. Listen, you fucking hippie. That's why you're probably not finding any success in trading. You're not focused on the technicals. You're not focused on the fundamentals. You're not focused on the psychology. You're focused on positive vibes. Markets don't give a fuck about your vibes, you fucking donkey. Come on, guys and girls. Man said positive vibes. Are you fucking delusional? You think the 1%ers, the traders, the market makers who literally... This guy. Listen, I don't want to roast anybody. Chat, you guys roast these guys for me. You guys have learned how to roast from me. You guys roast these guys for me. All right? Oh, man. Classic. No, economic data, we don't have much today. Burner, don't kill me. I'm going to manifest this bullish candle. That's... If you listen, you guys are talking about all this when we've already given full analysis across pairs. Like you guys are coming in an hour and 40 minutes late talking about positive vibes. Don't worry, one of you guys go play PUBG, the other guy go do whatever the fuck you do. All right? No, we don't have any data till 10 a.m. Eastern pending home sales. This is at 10 a.m. Eastern, but we also have Jerome Powell speaking today. All economic data is back to regular healthy levels. This is regular healthy economic conditions. Home sales are back into these regular levels. So economic data is looking pretty good. You know what I mean? Overall. Yeah. But that's at 10 a.m. Our stream's not going to be running that long. Unless you guys want me to go till 10 a.m. How many people do we have in the stream right now and how many likes do we have? I can't see. I can only see the chat. We need at least then, if we have 500 people, we need 400 likes then. This is the Reuters icon terminal. This is for private channel members and for myself. This cost 20 grand a year for me to have. Up to the second news headlines across the world, up to the second economic data. You know what I mean? Good stuff, good stuff. This news terminal for private channel members is connected to this news terminal from Reuters icon. I have a contract with Reuters icon. Yeah, it's 20 grand. It's less expensive than the Bloomberg terminal though. Bloomberg terminal is like 40 grand a year. Yeah, you guys think I play around in the markets? You guys think I'm here to play games? You think I'm here to worry about vibes? No. This news terminal is for private channel members only. That's why some people join the private channel, because it's $100 a month just for the news terminal. Just because. But for anybody who can't afford the private channel, don't forget the Capital Hungry News Twitter. This news Twitter's already automatically posted 22,000 news tweets. So if you guys don't want to join the private channel, you don't have to. This Capital Hungry News Twitter doesn't post as many headlines as the news terminal. It posts one of every 7 headlines. It's this bot right here. See this Twitter bot? So let me explain to you guys. This is the news terminal bot for the private channel. No, that's the price monitor bot. This is the news terminal bot. If you guys can read it, every time a headline is found, then it sends the headline to the Telegram chat for the private channel members. Every single time a headline is found, it'll say one new headline and send it, right? But the Capital Hungry News Twitter does a count of 7 first. Then it sends a headline. No, 5, yeah, 7. It has to count 7 headlines, an inside counter, then it's going to send a news headline to the Twitter feed. So every 7 headlines that the news terminal gets sent to Twitter. You get what I mean? That's how it works behind the scenes. So this news Twitter for free people gets every single 7 headlines found in the news terminal. But even with that, it still posted over 22,000 tweets. You know what I mean? So it's good shit. It's a good source. Yeah, you think I play around with Capital Hungry? You think I play around? These guys get key level price alerts. They get member analysis. They get price monitor market updates. They get key level price alerts sent right to, like, for example, all these UCAT alerts for these guys, they got sent to the chat. 1739 alerts sent to the chat. New session open and reminder alerts. the news terminal itself, the private chat gets. For example, we already did a trade idea webinar last night for the GJ cells, GU cells, and so forth. CH is just a different breed. You guys can't compare to that. Sorry. I'm just going to be honest there. Yeah, we don't play games, all right? I actually do, yo, Burner, I actually do send daily positive quotes. Not actually though, but I actually, you know, I don't send daily positive quotes. I send daily motivational quotes like, "Hey, fat asses, go to the gym." I don't send anything positive or nice. I just say, "Yo, fat asses, if you didn't go to the gym, go to the gym." Who didn't cook for themselves today? Cook some and meal prep for yourself. Can I show a signal shared in that group? We called GJ Sal's last night from the retest of 151.200 as well as the break below 150.8. Do you guys want to watch that video analysis where I did the market update webinar for the chat and we called GJ analysis? Here it is. I'll play it for you guys. So this is a market update webinar I did for the private chat last night. Upside, majority side during the pandemic, anything in a second. Where is the trade idea? Our force get a shift in from back to take advantage. So first thing, strength coming in that process. When you're looking across an outflow of liquidity in GBP across the board against majority at a very terms of the price profit take London and New York. We called sales from these with areas. Safer sales below 0.800 and 150.5. This was sent last night to the private chat so they can take advantage of this ahead of time. Sorry, not blue. This was GJ where we were looking for sales at the red box, 151.2. If we came up to 151.5, if we broke below 158, if we broke below 150.5. And I could personally only take buys. So right, there's the before. There's the before. Bam! There's the after. Bam, bam, bam. You gotta fucking love to see it. You have to love to see it. You have to love to see it. It's almost beautiful. Right? Then we're talking about GU. Interest, so we can like sell or and one GU's after this. Down at looking at is all fun lows. In case we don't break. So this was GJ again. This is GU okay? Here. If we break to the upside of this zone, we're looking for sells in two areas get on further GU. Sellers in the market. Either the break of the low sells, right? Break below 1.352 sells, or sells from previous low sells, continued US dollar strength, or the sells and break below 1.35 sells. Bam, bam. Overall sells. The right? Good thing. Bam. GU. GU. Bam, 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 bam. We didn't get the pullback sells, but hey, what can you do? You're not always going to be right. You know what I mean? Can't always be right. But yeah, that was sent to the private channel last night at 9:30 p.m. Eastern, so they could take advantage of it during Asian session, as well as London session, and in the morning while I'm sleeping. Every week in the private channel, we do 5 of these market update webinars at Asian, so members can take advantage of the analysis I give, as well as 5 New York scalping sessions too. You know what I mean? Yeah, what do you guys think about that? Huh? What do you guys think about that? Yeah, it's pretty clean, eh? It's pretty clean, eh? You think that capital hungry is only signals? I don't send signal quotes. I do full 40-minute webinar. If I'm sending a Thunder setup, you asked a good question. If I'm sending a signal or trade idea, it comes with analysis ahead of time. I'm going to do a full breakdown in webinar of why, hey guys, this is why I see the analysis. This is what I'm expecting. This is what we're looking for, right? For example, within the private channel, you can see the Monday market update we did. You can see the live trading sessions. All we do is webinars in the private channel. It's just Zoom sessions. Trade idea updates, weekly recap, and so forth, yada, 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 yada. All right? Yeah. So we had nice continuation moves here. What's BOSS? I don't know about BOSS token. I'm sorry, everybody. I don't know about the altcoins. All right, everybody, keep in mind now, okay, gold starting to break below 1739. We also had this candle close without an upper wick, showing more seller's pressure. As long as dollar continues bullish, as dollar is at 94 flat, what I'm going to be looking for is new 4-hour candle to make an upper wick, then the potential sells below 1739. All right? GJ on the new 4-hour candle, I'm still looking for sells below 0.200 here. Oh, they're bots? My bad. GU, the sells are gone. Those are already running. Euro USD, sells are already active after we had this pullback phase in the break of these lows. This was the same thing for Euro USD sells we called as well. UCAD, buys ran for about whatever 15 pips from the 1.27 break and retest, 18 pips, but on the new 4-hour candle, I'd be looking for a 2.7 retest. US 30, I'd sell below 34,300. Okay, now for the next 15 minutes, I'm going to be answering questions as well as looking at anybody else's charts before I go here. So if anybody wants to send me TradingView charts or you want to ask questions, let me know now. Otherwise, I'm going to be ending the stream shortly as we've been running for our 2-hour mark. We had some great analysis given. We had UCAD play out, but Kevin distracted everybody. GJ is probably going to play out the new 4-hour candle in NYSE. Same with GU is going to continue to drop. Gold, if it stays below 1739 after the new 4-hour pullback, 1740 to 1739. So let me know now. If you guys want to ask any questions or send any charts, send it now. For anybody who's asking about how I enter and confirmations for entries, please go look at all these webinars. I'm so tired of talking about all the shit that's on the YouTube page. There's no clickbait here. There's no me showing off a car, showing off a Lambo, showing off signals. There's none of that here. All right? There's none of that here. Dollar is strong because we're starting to enter a tapering phase by the Federal Reserve. Thoughts on someone that is heavily invested in US stocks? Stocks only go up, but you are going to see a correction with tapering. For anybody who's asking about gold, GJ, higher time frame, lower time frame, you have webinars on scalping, webinars on central banks, webinars on crude oil, fucking fundamental timeline and historical breakdown of GJ, greatest transfer of wealth, gold breakdowns, intraday analysis, higher time frame analysis, lower time frame analysis, 1 minute time frame, how to use 1 minute, how to use hourly, how to use daily, how to use monthly, live trading sessions, live market update webinars, short little market updates. You have everything here. You even have me doing rants about society and shit like that. All right, you have a lot of resources at your fingertips here. All right. It would probably take you longer than any paid course to go through all of the webinars here, and it would probably teach you more than any paid course. If you compare the free YouTube page to any Miami marketer, I guarantee you will learn more off the YouTube page for free. Right? Look at this shit. Look at this plethora of information. Live trading sessions, whether it's scalping sessions, intraday stuff, higher time frame stuff, scalping stuff, swinging stuff, everything. Everything. I can't say there's something not here related to the markets. The Capital Hungry free news Twitter. The Capital Hungry free Telegram analysis channel as well. Right? If you want to learn more and you want to get access to all the Capital Hungry resources, then you can come pay $3 a day or $100 a month and you get access to all of this stuff. You're gonna learn everything I know and a lot more than that too. Tons of resources, tons of tools, from price alerts, session open and close reminders, newsroom, psychological reminders, daily live price action trading sessions, daily market update webinars, weekly economic reports, access to a cryptocurrency newsroom. Every month and quarter, we do a $1,000 giveaway to a Capital Hungry private channel member. Access to the full history in Capital Hungry. 600 plus. You guys want to see how many webinars I've done? You guys want to see on my computer? Look at this. I'm going to brag about one more thing, if you guys don't mind. This is an external hard drive I have, right? This is where I save all of the Capital Hungry webinars. Within every single file folder here, you have a webinar, whether it's a market update, right? Every single folder within here has a webinar, whether it's a market update, scalping session, or whatever. 700 webinars that have been done in Capital Hungry. What marketer is doing that? 700 webinars I've done in this bitch. 700 webinars. What else do you need to see about work ethic? About consistency? About putting in the time and effort? Every single one of these is some type of educational webinar on the markets. 711 items. Crazy, right? I've been trading for roughly 4.5 years now, since late 2016. My first 2 years were pure failure and losing money. Yeah. So within the Capital Hungry private channel, you have access to all these 700 webinars, essentially. They're all available for anybody to rewatch. Like this is an NFP breakdown that was done in 2019, for example. You know what I mean? You have webinars from 2019 all the way up to today. The last market update webinar I was just showing you guys, where we called the GJ sells, GU sells, Euro USD sells, and UCAD buys. Right? Find me another mentor who's done 700 webinars in a year and a half. That's like 10, 15 webinars a week. So that's the last thing I'm going to flex. That's the last thing I'm going to flex. That's it. All right. New 4-hour candles coming up. Yeah, I'm going to check out some charts and I'm going to call it a day here, okay? Yeah, there's no vlog. Those webinars are not vlogs of me showing you the car I bought. New 4-hour candles here. This is looking good for gold for potential sells to come, because this 4-hour candle does not have any lower wick created yet. And once we grab some liquidity, if we don't break back above like 1741 and we come back below 39, I can see us starting to drop here on gold. And flipping and making this candle once we grab some liquidity, and if we come back below 39 here. All right. Nah, nobody has 700 webinars recorded. Sorry. Nobody does. I would love to see it. besides Raja, because Raja does daily trading streams. So Raja probably has a total of like 1,000 fucking webinars saved now. But that's the work. That's the grind. Okay, never mind everybody. 9 o'clock. This is my time to go here. Alright everybody, thank you for attending. Please make sure to watch this webinar. We had some UCAD buys play out for 20 pips. Euro USD continuation sells. GU, we didn't get the pullback. GJ, still no clean break below 0.200 yet. We're still just in this range on the lower time frame. Gold sells if we remain below 1739 for some potential scalps. We gave fundamental and technical analysis across pairs. We discussed fundamental points. We discussed what economic events we had in play. We also gave mental and psychological reminders to all of us as retail traders. I'll see you guys on Friday. Please take care. Have a good day. And go to the gym if you're fat. If you're too skinny, if you're too fat, make sure you go to the gym today and eat right, fuel yourself right. Push yourself to your fucking limit. Alright? Push yourself to your limit. Let's all push each other to our limit. Whether that's studying the markets, whether that's going to the gym, whether that's playing a sport, whether that's developing a business or a skill set, let's push each other to the fucking limit until the day you die. Because the only thing promised in this life is death and taxes. So you better learn how to live life to the fullest till you die, and you better learn how to evade taxes. You know what I mean? Everybody take care. Have a great day.